Hey traders, welcome back to my weekly index market review. This week we had a full slate of US data from CPI, PPI, and unemployment claims to consumer sentiment, all moving the Nasdaq and S&P 500 around key levels. So I'll walk you through how these fundamentals lined up with ICT concepts like the power of three, liquidity sweeps, and displacements. To start off with, we had no news on Monday and it was an absolute trash price action, so we'll move on from that. On Tuesday, again, no news and the market was a little bit more complex. However, the 10 a.m. candle gave us a second intermediate time frame bearish SMT, trading into discount levels for ES, which was the weaker pair before the true run up during the lunch hour. On Wednesday, core PPI flipped from 0.7% to minus 0.1%, showing a sharp cooling in producer inflation. That took some pressure off the Fed and sparked risk on flows. From an ICT perspective, it lined up with liquidity sweeps into lows before displacing upward. So during the morning session, it was an external to internal trade setup. NQ was weaker, so we had a better bearish structure on the hourly. And during silver bullet, price retested into this bearish hourly order block before taking sell side liquidity sitting below discounted levels. On Thursday, the US headline CPI rose to 2.9%, indicating that inflation is creeping back up. The jump in unemployment claims suggests less stability, adding weight to expectations of a slowing economy. So this combination gives mixed signals in terms of the Fed's decision, which will at this point depend on which trend dominates. And in terms of price action, bullish order flow continued. Price again ran sell-side liquidity to give smart money opportunities to long at a discounted level. And with that, Friday's prelim sentiment data dropped to 55.4 and the expectations for inflation over the next 5 years rose to 3.9%. As a result, indices opened lower after the report, and this gave us a great setup with price giving us a discounted long from true day open before running higher for the rest of the day, with NQ finally taking out all-time highs. And that's it for this week's review. All data pointing to Fed cuts ahead, but also raising some big questions about growth down the line. And in terms of ICT concepts, well, we had open, low, high, close all throughout the week as we move towards all-time highs. So if you were able to position yourself for a long below midnight opening price each day after Monday, that would have been an easy 2i. So as always, in terms of fundamentals, it's not just the numbers, but how price reacts around liquidity and structure that gives us the edge. And that's it from me. Thanks for tuning in. I'll catch you in next week's breakdown.